All right, guys, so here is my recent battle with Lucid Group. And this one, it's a multi-day play, it's a multi-trade play that initially did not work out. And my thesis was not incorrect, but my timing was, and my timing is attributed to the market's going to do whatever it wants to do. I got to just sit idle, manage the risk first and foremost, and just let it happen. So we're going to start off with looking at this 5-minute trend. And right over here, price action broke below the 200-day simple moving average. You can see there's a little bit of structure through this area. We get below that 200, VWAP drops, we break lower, and then we retest and really start to sell off. Anytime I see a sell-off below the 200-day simple moving average, these little bumps are nothing more than relief rallies. The overall sentiment here is short, and everything that gets, I can't even call it long, but everything that moves to the upside is nothing more than short-term relief rallies, as in short traders are covering positions, short traders covering positions. And it happens over and over and over again, and then we start to really break into some really big, meaningful moves. And the first thing is we get this breakdown. You can see we bear flagging, bear flagging, bear flagging, and then right through here we get the gap. So this is where I pinpointed that I wanted to trade Lucid, only because it showed up on my scan. I don't build watch lists. Some do. I don't. I depend completely on a scanner. And 9 times out of 10, even with news, I don't even particularly care what news is. It's just more about what is price action doing, right? You can get great news and stock plummets. You can get bad news, stock bounces for one reason or another. So what I do is I usually turn a deaf eye and a deaf ear to news. So you can see right through here, gap down, price or the Lucid shows up on my scanner, and I'm trading the breakdown of this 5-minute candle, and you can see that the breakdown here works, and then we immediately bump. Now if I actually move to this level and mark this off and go left, you'll see that that intersects with some key levels back, maybe even a little bit further. So you can see right through here, this area right through here where price action jumped off. You can see that we've got some structure back here, and we've got a few tests back here that fail before finally breaking out and flagging long. So it's a key level to keep an eye on. And the idea here was 5-minute candle, we'll trade lower, bounce off, maybe retest, and keep going. Didn't happen. Price action snapped against me, got long, I had to get out of the trade. It gapped up higher, then started to sell off, and so the way that I'm looking at this is, again, we've got these little relief rallies. The question is, what happens when it actually finally breaks down and moves to the downside? So right here, again, I'm given the same setup, and I have to go in and I have to go to work. So we get the 200-day and the VWAP with price action gapping down. And so I followed the same strategy where I'm looking at that first 5-minute bar right through here to print. And then anything below that level is where I want to get short. And you can see that it broke down. We had this little reversal candlestick pattern right through here. And then price action filled the gap, push higher, got over the 200-day simple moving average. At this point, against my better judgment, I decided not to cut my position. And the reason being was these rallies to the upside, I was calling bullshit, because if you look at the past rallies, anything below the 200-day simple moving average inevitably dropped lower. Here, 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 and then the gap down here. And then below the 200, here again, we dropped and then we gapped lower. So when I was looking at this rally, the idea here was, if you look at the overall trend since coming below the 200-day simple moving average, everything continuously drops lower. Now, one thing that I did mention in chat yesterday was this right through here. Head and shoulders pattern above the 200-day simple moving average. I'm still short at this particular time. And when I saw that price action had rallied over the 200, moved sideways, bumped, and then started to put in these lower levels right through here, the first thing I thought to myself was, okay, well, if we were to use, say, just a standard measured move, that would take us to here. And you can see that price action has this neckline. So the idea was, when that neckline snaps, a measured move says we're going to get below VWAP. The idea was below VWAP we would see considerable selling, and after hours yesterday, that's exactly what happened. And so my thesis on staying short was correct. My thesis on short covering was correct. And then today, price action floated lower pre-market. We got this nice bump at the open. And then right through here, this thing really started to sell off and sort of move into the oblivion. So essentially what I'm looking at now is I've got this head and shoulders pattern, measured move, VWAP triggers selling, we put in a low, we rally, we put in another low, a little bit of a rally, put in another low, but it's at this structural level, and you can see that the structure is approximately set here, it's tested and held here, it's tested and held here, it's tested and held here, but the question is, how many times can this thing test and hold before it finally breaks? And the answer, right through here. So as soon as price action rolled over, and I'm still short this, remember I'm short yesterday at this opening bar low. It moves lower, we get a retest, a little bit of a rally, straight into VWAP, right through there. Excuse me, and then from there it's a wrap, and then this thing just starts selling off lower and lower and lower. Now what I did have on here was my profit target taking tool, and it gave me some mathematical levels that I was looking at. And so the big question is, if we snap here, what's stopping it from dropping all the way back down to 38? And the answer is nothing. And so what happened? Price action just essentially dropped like a rock. We got a bit of a bounce. We came back down, and then that dead cat bounce, so to speak, just completely sold off. And I actually sold my position 5 minutes before the closing bell. And the net result was, I think it was either 110 or 115% return on the options that I was trading. Now, the last couple day trades that I got into with options, I noticed that they were moving sideways and then moving lower the following days. I wasn't getting a gap down and a push lower like I saw last week and the week before. So to sort of manage my risk on that side of things, I decided to go, instead of buying weekly puts, I bought next week's expirations, December 17th. So I afforded myself a little bit of time, and because I was buying a lower speculative number, for example, when I was getting short up through here at 41, I was buying $39 puts. And so the idea is once it dragged through 38 and lower, these puts would really open up and work in my favor. And you can see we got all the way down to 36. So at this point, I'm buying puts out of the money. And then by the time I covered, I was in the money by about 10%. So these actually worked out very, very well, hence the 110 or 115% return on these. And LCID was a pretty decent trade. And the real thing here is to understand the technical component and the attitude of the stock that you're trading, not to P&L trade. So one thing that I don't do is when I'm trading, I will not trade the P&L. I'll check it, but that is, it's a bit of a detriment sometimes psychologically if you're looking at your P&L while trading. So what I was doing was I was sheerly focused on just the technicals, what the technicals are doing, what the chart was telling me to do, and every single rally that I saw historically, I called bullshit on, right? We get a rally here and a fade, rally, fade, gap down, a rally and a fade, a rally and a fade, a rally. And so based on what has happened, the idea was we were probably going to fade. And the whole trade was based on this head and shoulders pattern breaking down. If this had not broken down for me and had rallied in the opposite direction again, I then would have taken the trade off. But the idea was this is a high probability pattern. I mean, if you want to get really down to the nitty gritty, I mean, maybe it's a complex head and shoulders, but the measured move suggested that if it hit VWAP, it could see some more selling, and that's exactly what happened. So you can see that we actually sold from 43 down to 41, a 2-point loss of value, and then from there, bam, right into target. And that's the trade, Lucid. 110 or 115%, I can't remember which one it was, but it was a triple-digit gain. First one of the week, and not too bad considering not last week, but the week before that, I had 5 or 6 in a row that were all north of 100% gain. So that was a realized gain. I'm out of this position. Lucid Group, I'm done. Thank you. It's volatile. I loved it. The options were great. And this trade is done.